Welcome back. Now, yesterday, the Cabinet Secretary for National Treasury, Henry Rotich, did make announcements that he would be introducing 3 landmark financial sector legislations, among them the Financial Services Authority Bill, the Nairobi International Finance Center Bill, and the Movable Property Security Rights Bill. But that is just one of them. But then that is also to strengthen the financial sector stability. But he also did say that the current monetary penalty for violation of Banking Act or the prudential guidelines is capped at 5 million shillings. But then this amount seems to be too little compared to the seriousness of some of the violations institutions have committed. Now, to have this conversation with us, would now like to speak to the Managing Director and Chief Executive Officer for Family Bank, that is David Tukusin. Thank you so much for joining us. Well, what do you think about the Cabinet Secretary's remarks to increase the penalty from 5 million to 20 million shillings?
Thank you, Joy. That question is very emotive to many people, and many people have asked me that question today.
Yeah.
And the reason for that is because the banking sector is a nerve center of the economy. And if the nerve center of the economy is having issues, then everybody gets concerned. I think the foundation question to ask yourself is, why do you even get into penalty zone? The basics of banking are very simple. The industry rests on just one thing, confidentiality.
Yeah.
And the Cabinet Secretary is right that there has to be confidentiality in the sector. And if the penalty is what is going to make people do what they should do, then I guess is in the right direction. Now, how does confidentiality help within the industry? Why is it that important? Is because banks primarily just take money from customers. So the customer has to have the confidence that the money will be there when they need them. And the bank has to have the confidence that not every customer will come for their money at the same time. Because if they all come at the same time, the economy doesn't grow, because the banker will be forced to keep the money in their strong room waiting for the customer to come. But for the economy to grow, the banker has to lend the money. So he has to have the confidence that not everybody will come for the money.
All right.
Now,
you only recently took the position as Managing Director and Chief Executive Officer for Family Bank. How do you plan on ensuring that Family Bank meets all the requirements, financial obligations that is required of it?
Very good question. And yes, I took the mantle when the industry was going through a bit of turbulence. But there are foundational questions that one asks themselves. How do you make sure that you remain truthful to what you are mandated to do? There are basically 3 players in that equation, 4 actually. There is the shareholders, there is a board of directors, there is a management team, and there is the customers and other stakeholders.
Yeah.
Where things go wrong is where those stakeholders are not aligned. For Family Bank, the first thing I did was to make sure that I am very well aligned with my board of directors. And my chairman, Dr. Wilfred Kiboro, is somebody who is respected within the industry, and we had to sit down and agree the mechanics of how we are going to make sure that we run and remain compliant with all prudential guidelines. And I have his total support, I have the board total support, we have the total support of the shareholders, the staff and management team that I work with, and most importantly, we have the alignment and engagement with our customers. So I'm confident that we'll be able to run the bank within the prudential guidelines as set out by the central bank.
All right, let's talk about financial technology, and I'm sure that this is also one thing that the Cabinet Secretary is working towards achieving with the Central Bank of Kenya. But how much of a role is technology playing in ensuring that banking transactions are made much faster at Family Bank, for instance?
Now, the technology and innovation world is a must for any bank. And for Family Bank, we acknowledge that and appreciate that. And we take a lead role in that perspective. Actually, that is actually the next frontier of growth for us. We are redeploying technology to make sure that our cost to serve our customers comes much lower. And that obviously translates to benefits to the customers. Our alternate banking space is where we are getting into in full swing. You'll have seen us out there in the agency banking space.
Yeah.
And you know that Family Bank was the first to launch into the mobile banking space with our PesaPap application. We are actively involved in the agency banking, in the internet banking. So the ABC space and technology is definitely the right place for the bank to be. And for Family Bank, we take a lead in that.
All right. Now, we have seen, of course, a number of listed companies as well, and other companies, family-owned businesses that are doing quite very well. But as Family Bank, you have put out a rights issue as well. But how much are you thinking of raising, and how long are you going to take before we can actually have all this amount of money raised?
Okay. Yes, the shareholders have given us mandate to go out to appeal to them to take up a rights issue. And this rights issue is basically to fund our ambitious growth agenda. We are looking at raising 4 billion shillings from our shareholders. The rights issue is in the proportion of 4 shares for every 25 shares held.
Right.
And we are offering that to our shareholders at a discounted price of 22 shillings per share. The offer is open until 27th of this month, and the appeal is to all our shareholders to take full advantage of this rights issue.
Okay, and at the end of it all, you know, let me take you back a bit to 2012, where Family Bank conducted a rights issue to raise about 1.25 billion by offering 40.5 million new shares at about 31 shillings each. You know, the funds were used to grow the local branch networks, but how has that impacted on the shareholders as well as the customers of the bank?
Okay, very good question. If you followed through the trajectory of Family Bank since 2010, the growth in that bank has been phenomenal. In 2010, for example, the total balance sheet was just about 10 billion shillings.
Yeah.
As we sit today, we are talking of a balance sheet of 80 billion shillings. At that time, we were just holding customer deposits of just about 15 billion shillings. As we sit, we are holding over 60 billion shillings in customer deposits. So the growth has been phenomenal, and that's the reason we are going back to customers to get more money so that we can sustain the growth trajectory.
Okay, well, thank you so much. We do appreciate the time taken to come talk to us about the latest developments at Family Bank as well. You can find out more about the rights issue as well by getting onto ktnnews.com, and you'll find out more about that as well. We've been speaking to David Thuku, who is the Managing Director and Chief Executive Officer for Family Bank. Let's now take a look at how the markets are performing, and we'll now like for you to walk with me to our wall here. And today the exchange rates, the US dollar is buying at 100 shillings and 98 cents and selling at 101 shillings and 18 cents. While the pound sterling is buying at 146 shillings and 46 cents and selling at 146 shillings and 79 cents, while the euro is buying at 115 shillings and 10 cents and selling at 115 shillings and 55 cents right there. Let's take a look at the NSE performance, and at close of markets yesterday we looked at a turnover of 765 million and the shares traded stood at 29.5 million worth. And the NSE 20 share index stood at 3,798.26 points, having dropped quite a bit right there. And the bonds traded, we looked at 2.4 billion worth of bonds transacted. The most active stocks as of today at 2 p.m. we looked at Safaricom that had moved a volume of 4.48 million shares. East Africa Breweries Limited had moved 2.50 million shares, while British American Tobacco had moved 1.31 million, and ICDC had moved 1.09 million shares right there. Let's take a look at the winning stocks. Crown Baja had gone up 8.33%. Home Africa had gone up 7.14%. And ICDC yet again gone up 4.49%, and Atlas Development had gone up 4.26%. And look at the losing stocks very quickly. On top of the counter right there on the losing side, Sasini Tea gone down 4.82%. Flame Tree had gone down 4.76%. KPLC had gone down 3.85%, and Olympia Capital had gone down 2.94%, with the sugar at 3 shillings and 30 cents. And that's it. Well, now let's take a look at our Twitter poll question and give you the full results right here. Do you think it was fair for the Minister or Cabinet Secretary to avoid raising tax on beer and cigarettes, but raise taxes on women's beauty products and cosmetics? The results are out. 33% say no, and 67% say yes, it was fair for the Cabinet Secretary to introduce taxes rather on beauty products and cosmetics. So those are some of the views right there. But you can continue the conversation on Twitter. You can go to @KTN News and you'll be able to share your views right there. My name is Joy Doreen Bira. Coming up next is News Hour, but for more business, log on to ktnnews.com.
Yes. 1, 2, 3, 4. Meh. Mm. Mm.